What is going on, guys? Welcome to today's video. I'm going to be doing my 5th video for the educational sections on the Discord. It's going to be a little bit of a mini course which will actually help you guys understand exactly how I trade the lower, medium to higher time frames with these indicators that I use and with the general technical analysis tools that I do use. And one of my favorite ones is Stochastics. If you have been in the group for a while, as you may know, I do use different settings for them. So we're going to be going through that, but we're basically going to be going through all of the simple stuff about it as well, exactly what it means, exactly how it works. I would have basically forgotten to talk about that, but I have written a few notes here so I can be as clear and concise for you guys. Okay, so we're going to add another stochastics on here because I want to show you guys the normal settings and tell you guys why I use these settings. You may want to use the other settings later on or down the road. I'll explain exactly why these are useful as well, or how they could be useful. As you can see, it's using a 14, 3, and 3. We'll get into that in a second here, but let's change this into basically white. If we can do that, that would be perfect. There we go. And then I like to basically go in here and put this as white and maybe put a either line, or you can put a line, or you can put dotted lines like that as well. So just play around with these as you would like, and I'll put these as the same color actually that I usually use in my videos so it doesn't confuse you guys. If we go outside here, as you can see, we'd use like a blue like this here, and we put it up here as well. I believe that's the color we use, but we'll get it close enough that really doesn't matter, and we'll do that as well. So now that we've got this, as you can see, there's a lot more crosses on this, but we'll get through it in a second. So let's go through the notes here. Basically, the stochastics oscillator is a momentum indicator, which shows the location of the closing price relative to the high to low range over a set number of periods. Okay, so that's very important that you know. You cannot front run the stochastics. You've got to wait for clear signals, and you've got to understand what the signals mean. It's not a perfect indicator, but it will be very, very useful to you if you can use it properly. Okay, so that's what we're going to be trying to achieve in this video. And basically there is two lines. One is called the K% and one is called the D%. Okay, when you go into the settings, you can see that the K% is the blue and the D% is the red, or the little pink that we're using right here. Okay, now on the normal settings, the K% is used as the 14, the D is used as the 3, and the smooth is used as 3 as well. Okay, so this is made to follow the speed or momentum of the price. Okay, so this indicator is made to follow the speed or momentum of the price. Okay, and there's two types of these indicators. Okay, and there's the fast moving ones, which is obviously this one, as it's using a lower period, and this is very, very volatile. As you can see, there's a lot of signals here. You can see that it crosses up, crosses down, crosses up, and then if you go here, it's a lot more smooth. You can see there's not as many fake signals and there's not as many reads on there in general, right? So this one, for example, crosses up here, as you can see, but this one does not, right? And so it gives you many signals. That's why I don't like using this one at all. I actually don't use the fast moving stochastic at all. Okay, and I use the slow stochastic as it's not volatile and generates better signals in general in my personal opinion. Okay, so in a strong trending market, for example, the stochastic will give you a lot of noise and false signals. Okay, this fast moving one, it will give you a lot of noise, a lot of false signals, and you just don't want to be using this, in my personal opinion. And you will see as we go through with this video, you will see exactly what I mean by that, especially if you're using it for the low time frames, which I love using the stochastics for the low time frames as well. This will just give you way too many signals. With like the slightest moves, you will get some fake signals. Okay, and basically you need to apply a specific strategy when the market is trending, right? So you can't use the same strategy when it's trending or trading in a range. Okay, you need to read the stochastics properly. Okay, so there's two ways you can use the stochastics. Either if it's in a range, so if we are in a range, for example, right here, we are trading in a range. It's very different as to when we actually pump out of the range and you clearly identify that we have broken out of the range. It's going to be very different. Okay, so if you are trading this range, for example, you can see that we go down, and then the stochastic is going down with it, and obviously bounce from the bottom of the range, and the stochastics pulls up, But this one's a great example because you go down, you go onto the pivot, you go onto horizontal support as well, and the price action bounces up, and so does the stochastics, right? And you can see how this one reacted faster because it is a lower or it is a faster stochastic right here. But this one gives you a very, very nice, you don't get the absolute bottom, but you can see that it does give you that confirmation that it's going to the upside. Okay, so if it's in a range, it's very different because once we break out of the range, you come up to these hot areas, you can't really be using it the same because as you can see, it did cross back down and we actually ended up pumping back up. So you got to be very, very careful with that. I talked about this in my public video on YouTube yesterday. Once these things happen right here, you've got to let the high time frames take over. For example, if we go on to the 12-hour time frame, this is when you want to go look at your 12-hour, you want to look at your daily. You don't want to be looking at the 4-hour, even though the 4-hour and the, let's say, 1 hour is fantastic for trading ranges, but in a strong trending move, you don't want to be trading the lower time frames, right? Because in most cases, you will see the high time frames are crossed up, but the lower time frames are telling you that we're going down. So that's what I was saying yesterday. You want to let the high time frames, or the high time frames will eventually take over. Okay, so I hope I'm explaining myself properly here. And basically, let's see, what do we want to talk about next? Okay, so there's that you guys need to know, trading in ranges. And if the market is trending very strongly, it's very, very different. There's different ways to use it. And over time, I won't be able to completely explain to you right now, but over time, as you use the stochastics indicator, you will see exactly what I mean. And you just saw an example of it, but over time, you just get better and better with it. And you understand that it's a momentum indicator. Okay, so don't apply the same reads all the time. Okay, you just can't do that, guys. If you do that, you'll get into trouble. Okay, and so basically, so the low stochastic, the slow stochastic, sorry, is helping you slow down just the noise. Okay, so just the noise here if we go on to the 1 hour time frame, for example, that I use for scalping, and like the 5 minute time frame as well, you can see that the 1 hour is still coming down pretty aggressively here, but on this, it's actually about to cross up. You can see how beautifully this basically kept going up as the price action was going up. And yes, it was like turning back down, which naturally that will happen. But you can see that this just kept giving you fake signals, right? It kept crossing down, kept crossing up, kept crossing down. That's 1, 2, 3, 4, 5. You guys get the point, okay? So you want to slow that stochastic down so it gives you better signals, or it gives you less signals, okay? The standard Stokes will offer a lot of basically false signals. So these standard stocks, very, and a lot of false signals. Okay, I'm getting a little bit sidetracked here, but I'm trying to basically explain this in the best way that I can, because I think it's very, very important to understand to not use these slower ones. Okay, we'll get rid of it in a second, or to not use the faster moving one. Okay, let me read this and I'll actually see exactly what I want to talk about next. So I'll actually show you guys I've written down here, I'll show you guys the settings that I use for mine, even though I have in the Discord as well. So it's 14, 3, and 6. And let's see. Okay, so this is also very, very important. I think that this video is going to be a little bit on the shorter side, which is very, very good as well. So a lot of people look at the stochastics. We'll get rid of this completely. I think that I've explained myself pretty well on that. I won't keep explaining it because you guys get the point, right? So we use this stochastics, or personally I use this stochastic. A lot of people look at the stochastics just like they do with the RSI, especially the RSI does kind of work better with it. But a lot of people use the stochastics as saying that once it gets into the oversold region or overbought region, right? So when it gets into the overbought region, you've got to sell. Okay, that's it. So when it gets past 80, you've got to sell, and that's your signal. Take it and you're going to profit, right? That is a complete wrong way of thinking about it. Also for the downside, once we get down here, that's it. You've got to buy. Okay, we're oversold and we're overbought. That's not the way to look at it, guys, because in a strong trending move, if you sell, for example, here, as soon as we get past the 80 zone, you're going to go from 9,800, another to $10,000. Okay, so that's not a good idea. Let's actually go into the 4-hour time frame here. For example, if you, for example, sold this area once it went past the 80 zone at like 9,300, or even down here at 9,315, if you sold that thinking that basically we are overbought here and we're going to go down, you would have basically been sitting through almost $1,000 move from 9,300 all the way to like 10,068. Okay, so be very, very careful with that. So keep that in mind. You don't just think of it like that. You do think of these regions as the way I think about it is the bullish control territory and the bearish control territory. Okay, so when we are in there, the bears are in control. When we are up here, the bulls are in control. But at the same time, you don't stay here for too long. Like I always say in my videos, you will not stay in these regions for too long. But in a strong trending market, you can actually keep going back up, okay? And it doesn't really matter that the stochastics are up here. So you have to wait on confirmations and you have to trade smart with it. It won't be 100%, okay? So make sure you know that it's not good for oversold and overbought. It's basically just showing you the momentum behind the price action, okay? And basically there is 4 ways to use it. And I'm going to lay these 4 things out right now. And we could really write it here, but I'm just going to say it to you guys. The 4 ways to use it is the bullish control and bearish control territories. Think of them like that. So up here above 80 really would be the bullish control territory. That's when you know you're trending strong here. And down here is the bearish control territory. That's when you know you are also trending strong, but to the downside. And you can also use it for crossovers. That's the second method to use it. So crossovers are very, very important as well. The third one is divergences. Divergences are used on the stochastics as well. I personally don't use them, but you definitely can. I haven't found success with them in the past. I know a lot of people do like using them, and I also know a lot of people do not like using them. Okay, especially in crypto, I just don't like it. If I do see the divergence on the stochastics and also on the RSI at the same time, that's when I will be paying attention, basically, because that is very, very important. Okay, you want to see divergence on both the stochastics and the RSI, then you know that you have a good play right there. So the fourth thing is the trend lines, and this is one of my favorite things, guys, with the stochastics indicator, because it shows you momentum, and trend lines, especially in crypto, work very, very well on the stochastics indicator. I absolutely love them. They can give you some long-term plays. They can give you some very, very successful trades. And in general, you want to see 3 hits on a trend line. That's when it will be very, very good for you, and you will know that that is a very nice trend line, right? So if we come back here in February 27th, okay, and we draw a trend line, let's see if this one actually works here or not. You draw a trend line here, you see that we actually got caught basically in this region many times. From February 26th, we had 1 hit on it here, 1 hit on it here, 1 hit on it here, and 2 hits on it here, and also another one now as well. Okay, so that's a very, very long time, guys, from February 26th on the 4-hour time frame all the way to April 22nd. That's almost a month that the stochastics indicator was able to give you a bottom every single time. Okay, so you can see right here, we actually came back down. This caught the bottom right here. It actually, at 8,487, we went all the way back up to 8,900. Once again, right here at 7,635, went up to 8,200. I believe we actually shorted this little pump right here. If you go, would you count this as a hit on it? You could really count that as a hit on it. It did call the bottom pretty well and went up. If you go back here, you will see that we pulled back to 5,800, bounced on the trend line once again and went all the way up. You could really count it all the way up to this high at 7,400. So that's a pretty big move, guys. That's almost a $2,000 move. If you go down here, you will see that it caught a little bit of a low here at 6,700 all the way to 7,200. If we go down here once again, it just came down and hit it once again at 6,500. It did go up a little bit, 6,960, but it ended up falling back down, finding a new low, and then basically bounced right here as well, which gave you a fantastic buying opportunity at 6,800. So the way I look at these trend lines, and 6,800, that's basically taking us all the way back up to 10,500 now. So the way I look at these trend lines is I love using them on lower time frames because you can see them a lot on the, for example, 4-hour time frame. And if I even draw a trend line, possibly, if I remember correctly from my analysis on YouTube, there was a beautiful trend line on the 4-hour time frame up the top as well. Was this it? So you could call that a trend line as well, which hit once, twice, and we came back to it here as well. Okay, so if we actually go up the top, you see that it did call this top at 9,100. We ultimately came all the way back down to 7,000 before bouncing and going all the way back down as well. And this top right here at 7,136 came back down, hit this top as well, basically at like 6,800. So it was getting wedged in between these two trend lines, this resistance and this support. Okay. So I do use them on the lower time frames, but if you see them on the high time frames as well, they are fantastic. Trend lines are so good with the stochastics, guys, especially added on with your horizontals. This is basically how I trade, and this is one of my main things. Stochastics will not always work. You need to use them the right way, because they just show you momentum behind the price action. So if you think that, for example, the momentum is dying as soon as we come up on this 80 zone right here, you may be sitting through another little pump, right? So you've got to be very, very careful. Over time, you will learn how to use them. You can see trend lines very, very easily. I'm sure if we go into the 1-day time frame, we'll be able to see some trend lines. You do see that we have did we have a trend line formed here? Not really. But for example, we have a trend line formed right here. If we come back down, you'd likely be seeing that bounce. If you draw a trend line right here, this is a very, very aggressive one, but you will see that there is a trend line right here. If I go onto the Link USD chart, this was a great example I was actually looking at in a video. Good thing I remembered this. If you go onto the weekly time frame, guys, if you go onto the weekly time frame here, you see that there is a trend line formed here that has caught 3 lows, okay? So this was a great trend line because it started forming on this low at $1.46, took us all the way up to $3.39. That's a 135% move. The price action came back down, and we went and found a low at $1.60, and then bounced on that trend line once again down here for 211% to the upside. Once again, we hit the critical zone. We hit that bearish control territory, so that's a critical zone. And we came back down. We hit the top critical zone, turned back down on a weekly time frame, came back and hit the support once again. We hit the support as we broke the pivot on a weekly time frame. So the pivot was at $2.27. We hit that support, started turning back around, got this bullish cross, and went to the upside so far for 87%. Giving you this resistance breaking as well on a weekly time frame. A pivot breaking on a weekly time frame is very, very important. Okay, that's a major, major resistance on a weekly time frame. Add that with your stochastics. Add that with your stochastics turning back around, and also add that with your stochastics trend line support that has hit 3 times now. That is a very, very nice support. So you can add these things with confluence to other things. And if you have been in the group for a while, you know that I love finding high confluence areas, high confluence probability trades that I'm comfortable with, right? And this is actually when I started buying spot positions on Link as well, once again, and I bought them over here as well. This was a while ago if you watched my channel months and months ago. Okay, so very, very interesting indicator. I don't want to confuse you guys too much, but I will say one more thing. Just to make it very, very clear, you can also look at the 50 zone. The 50 zone is not a zone that many people look at, but it is a critical zone because it's the median of the range. I call basically the bearish control territory, I call this the critical zone, but I consider us going into the bearish control territory from about 40. So don't let this confuse you, but I consider us going into the bearish control territory from about the 40 zone and down, but the critical zone is 80 or 20 and down, right? So that's what I consider. So let's actually draw a trend line here. I consider this starting to go into that bearish control territory. I consider the 40 to 60 zone. Okay, the 40 to 60 zone, I consider it as the neutral territory. Okay, let me get rid of this. Obviously the 50 is the median, okay? But I consider this the neutral territory if you hear me talking about it in the videos, and from 60 all the way up to that 80 and above, or all the way up to 80, I consider it going into the bullish control territory, and above 80, I consider it in the critical zone, okay? The 80 zone is very, very important as well, because if we go onto the price action, you can see that, for example, right here, you see the stochastics turn around right at the 80 zone, hit the 80 zone, turn back around. Right here as well, basically hit the 80 zone, turn back around. Down here, hit the 20 zone, turn back around. Hit the 20 zone, turn back around. Same thing over here, same thing over here. Right, so you see a lot of confluence there. You also see a trend line forming all the way from March 30th that is stopping the lows, okay, and right at the bearish control territory as well. Okay, the critical zone. Down here, 198. Down here at $3.10 all the way up. You guys get the point, okay? Go ahead and back test this. Watch the videos if you have to a few times. Watch it once, twice, 3, 4, 5 times. You're only gonna get better and it's only gonna benefit you. Look for high probability trades with the stochastics. Concentrate on one indicator, concentrate on one method, and use the pivots. If you are a little bit of more of an intermediate trader, use the pivots, use the horizontals with your stochastics as well. It's a very good indicator. It's very, very useful. Once again, my settings are 1436. I hope you enjoyed the video. I hope I made myself clear. I didn't want to make it too long and I don't want to make it too confusing. So I hope this was all good. I appreciate you guys tuning in. Let me know if you have any questions and I will catch you guys in the Discord.